Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we are going to be responding to my last video about Safemoon getting to a penny because there were numerous comments critiquing how I handled calculating in that video, and most of it was due to the burn rate calculations. I had several comments of people saying, "You didn't even include the burn rate in this calculation. This calculation is utterly false. You're just here spreading FUD." So yeah, guys, I'm not here to spread FUD. There's literally no incentive for me to do that. There would be way more incentive for me to just talk about Safemoon and say it's going to the moon, because that's what people want to see on YouTube. Me being a realistic YouTuber and having realistic expectations doesn't always get the best turnaround when it comes to likes and comments. However, I like to keep it real and authentic with you guys. So that being said, I'm going to make a clarification in this video because I did not include the burn rate in the previous video, although in the end the burn rate doesn't make too much of a difference. And even if conditions are the most ideal and the maximum amount of coins are burned within the next 4 years, I made my prediction up to 2025, then Safemoon would still require an enormously large market cap to reach a penny. So with that being said, let's get right into the video. So before we get into the video, I want to take a look to the total market capitalization for cryptocurrency. As you can see, it kind of fell off a cliff as of last night, and I'm going to be drawing little support and resistance lines, and you can see that it broke right through that support line. So it is currently in free fall, trying to find a new support line, and this could be a very, very concerning thing if you do hold cryptocurrency, because cryptocurrency is prone to corrections in the tune of 80% at any given moment. So be very, very careful. This cryptocurrency bull run has been a slow and more drawn out process than the previous bull runs, so it may not crash as much, and there has been institutional investing. However, it is extremely risky. I must reiterate, investing in cryptocurrency, especially at an all-time high, is very risky, and you can see the risk now. As you can see, it broke the trend and dropped very, very much. If you bought Bitcoin at $60,000, you would have lost 50% of your investment. So that being said, you really do need to know the risks of investing in cryptocurrency. And no, this is not FUD, this is facts. Cryptocurrency has crashed in the past, and history doesn't repeat itself, but it often rhymes. So you really do need to be careful when investing in these risky assets. They're not going to protect your assets if something extraordinary does happen in the marketplace. So keep that in mind. Be a prudent investor and be aware of the risks investing in any asset. There's no one thing that will take you right to the moon without going up and down. There's always the downswing. It's never just a straight shot up without going down. So be very, very careful when investing in these risky assets. Hey, you there. Yeah, you watching this video right now, like that video, and then after you like that video, go look at the description, because there's some great opportunities for building your wealth. If you do want to buy the dip on Bitcoin, on Ethereum, on any of these altcoins, if you don't want to buy those assets because you think they're too risky and too volatile, and you want to earn an APY, which is an interest rate higher than your bank account on those assets, you get up to 8.6% APY by investing in BlockFi. So click that link below in the description to sign up for BlockFi and get that better interest rate than your bank. And if you want to get invested in the stock market and follow me on your investing journey in the stock market, use the link below to sign up for Public, because Public, they offer up to $50 in free stocks of your choosing. You can choose Tesla, Disney, Amazon, whatever you want, and you don't even have to deposit a dime. Just link your bank account and you get up to $50 in free stock for signing up. It is a great trading platform. I personally use it. I have a YouTube portfolio over there. It's also a social media app, so you can follow people, see what they're buying, see what their portfolios are like. If you want to learn more about investing, I highly encourage you to sign up for Public. using that link below in the description. Anyways, guys, let's get right back into the video. All right, so here we are on Safemoon's website. We're going to scroll down right here. As you can see, the circulating supply is $584 trillion. It started at 1 quadrillion, which is a little less than double this amount. So a lot of the tokens have already been burned since launch. 223 trillion tokens were actually burned at launch. So when the coin was released to the public, there was not exactly 1 quadrillion tokens left in the launch, and there has been a few manual burns since then. So the other aspect, besides for the manual burns that are made by the devs, are the tokens that are locked in the liquidity pool, which are 5% of each transaction. And this is on the buy side and the sell side. Now, I found this awesome spreadsheet that basically shows how many tokens have been burned each day. So we're gonna go through it. So it started at day 0, which was the launch day, and it comes down all the way to today, which is May 19th. So as you can see right here, this number right down here, 584 trillion tokens are what is in the remaining supply, and day by day it gets smaller and smaller and smaller, as you can see as we scroll up all the way to launch day, where it started with 777 trillion tokens. Now, one thing to note is that this token rewards early holders more than it rewards later holders. And what I mean by that is that the tokens burn way faster at the start, closer to launch date, and as it progresses, it becomes less and less tokens getting burned day after day after day. As you can see, it's much less each and every day, and it also relies on the amount of volume that occurs each day, because if there's not as much volume, there is not as many coins being burned. Then the spreadsheet also tracks the burned supply as well. So it starts at 223 trillion tokens, and it increases gradually. As you can see right here, there was a manual burn where it jumps from 245 trillion to 373 trillion. And we're just going to scroll down so you guys can see just exactly how many are burned each and every day. As we get towards the end, there's less and less and less. And as you can see, it stays at 412 trillion for a few days, then 13 for a few days, 14, 15, and we are now currently sitting at 415 trillion tokens burned. Now, right here, we can take a look at Safemoon's white paper. As you can see, the supply decreases and the price increases, as you can see right here. However, it is not in a linear fashion, and that's what I want to show you guys, because as the total supply decreases, less tokens will be burned, evidently, because 5% of 1,000 is a much greater supply than 5% of 100. So keep that in mind. Over time, less and less and less tokens can be burned. And this chart also implies that the volume that is traded is going to be staying the same. If volume dies down, less tokens will be burned. Now, here we are on CoinMarketCap, and as you can see, the price basically fell off a cliff last night with this large Bitcoin correction. However, I wanted to show you guys the daily volume. So the 24-hour trading volume is $40 billion. So that means a lot of tokens are being burned if $40 billion of supply is being traded every single day. However, $40 billion is a lot of money to be traded every single day. And currently Safemoon is in a state where it is talked about a lot. People are speculating on it, and evidently it is being traded a lot. If this volume dies down, which is a very likely scenario, 40 billion, again, that's very, very large amounts of volume. You barely ever see this much volume in other asset classes. Less tokens will be added to the liquidity pool if the volume does in fact die down. If the volume does not die down, then yes, the same amount of tokens will be added to the liquidity pool, although the supply will be decreasing, and therefore less tokens will be added to the liquidity pool over time. So with my calculation, I use a linear analysis to solve how many tokens will be left in 2025, even though it will be more of an exponential decay than a linear decay. So a linear decay will be decreasing a lot faster than an exponential decay. As you can see, it slows down over time according to this chart. So we're going to head back to our Reddit post right here. Shout out to this guy for making this chart. However, he created a prediction for the burn at the end of 2021, which will be 491 trillion tokens remaining at the end of 2021. So this implies there will be 507 trillion tokens remaining at the end of 2021. The current supply is 584 trillion tokens. So given the current estimate at the end of 2021, in order for Safemoon to reach a penny by 2021, we would have to multiply 1 penny times the market cap of about 507 trillion, which gives us roughly $5 trillion in market cap we would need, which is over double that of the total cryptocurrency market cap. So by the end of 2021, it is very, very unlikely that Safemoon reaches a penny unless the devs do a very, very large manual burn on these tokens. So that being said, taking in only the 5% tax, it would need to have a market cap of $5 trillion to get to a penny by the end of 2021. And going back to the total market cap of all assets, as you can see, gold is at 12 trillion, so it'd have to be a bit less than half the market cap of gold by the end of 2021. And gold has been accumulating this market cap of 12 trillion for so long. And then Apple is at 2 trillion, so it would have to double that of Apple. So it would have to over double that of Apple by the end of 2021, which again, I think is just very, very unlikely. So with the next part of my analysis, I'm going to give the generous estimate that by 2025, there's a supply left of 100 trillion Safemoon tokens. Now remember guys, Safemoon decays at a slower rate over time. So as it progresses, less and less coins get burned over time. So keep that in mind, because when I did this analysis to come up with the 100 trillion tokens left in 2025, I used a linear scale, which would imply the same amount of tokens are burned each and every year, okay? So it'll likely be a lot more than 100 trillion tokens left in 2025. So using the same calculation as before, we take 1 penny times 100 trillion. That leaves a market cap of $1 trillion that Safemoon has to reach by 2025 in order to reach 1 penny. This would imply that over 90% of the supply of Safemoon is burned by 2025, and this coin has decayed at a linear pace. So likely the supply of Safemoon will be much larger than that in 2025. However, for the simplicity reasons, we're going to use the $1 trillion market cap as the target by 2025 to get to a penny. Coming back to the market cap website that has all the market caps of all companies, we can see that this would put Safemoon right between Google and Facebook as having that market cap. So by 2025, Safemoon would have to have a market cap of $1 trillion, which is larger than Bitcoin, larger than Berkshire Hathaway, larger than Tesla, etc., guys. And do I think that this is very likely? Well, it depends. If you think Safemoon is really going to replace Bitcoin, then yes, it is very likely. However, I don't know if I believe that. I'm not completely bullish on Safemoon, as Safemoon isn't even its own cryptocurrency. It is a cryptocurrency that is listed on the Binance Smart Chain. So it is the BSC token. So with that being said, it isn't its own cryptocurrency. I personally would rather throw my money in Binance token or Binance Smart Chain token. As for me, I think that is just a better bet for keeping your money safe. So guys, that is all I have for the video for you guys today. I hope you guys enjoyed. I think it is very, very, very unlikely that Safemoon does reach a penny, and I did include burn rate this time, so don't come after me in the comments. I did my homework this time, and it is still very, very unlikely. This coin has such a massive supply, and the rate at which this supply will be burned is going to be decreasing more and more over time. It would also imply that Safemoon continues having a volume of over $30 billion a day within a 24-hour period, which is a very, very high amount. And this coin is meant for holding. So a coin that's meant for holding has a very, very high volume. That is a reason to be suspicious. That is definitely a risk factor when holding this coin. And I'm sorry I can't be super bullish about Safemoon like everyone else. However, guys, cryptocurrency is very risky. In 2017, there were many altcoins that reached the moon as well, and those cryptocurrencies fell to the ground, and many people lost a lot of money doing that. So if you guys don't want to hear this, then you don't have to subscribe. You can leave a comment, you can dislike the video, but these are my opinions on Safemoon, and I hope you guys have enjoyed. I hope you guys have learned something new today about Safemoon and about investing in cryptocurrency. As you can see, even Bitcoin is not a super safe asset. I even said that in my previous videos, that investing in Bitcoin, even Bitcoin is very, very risky. There's tons of leverage being used in cryptocurrency. So as soon as something gets liquidated, the computers go off and everything else gets liquidated to cover the debt expenses. So it is very, very risky investing in cryptocurrency. I'm still bullish on cryptocurrency for the long run. And full disclaimer, I have not put any money into cryptocurrency in the past few months. I invested in Ethereum in around November for about $500 in Ethereum token, and recently I hit my stop loss and sold Ethereum for $3,300 in Ethereum. So I am not currently buying at these levels. So that is my full disclosure. Perhaps I have a bias in my opinion. However, it is simply just difficult for me to continue purchasing these assets when they're at their all-time high, especially when they are very risky and volatile assets. So that being said, that's about it for today. I hope you guys enjoyed the video. Remember to leave a like on the video if you guys enjoyed. And yeah, that's about it.